One good thing about hitting rock bottom. The only way to go now is up. But is that what we are seeing now with Bitcoin? Is it time to start buying a little more coin before the price blows up? What do the TV people think? Let's find out, and thanks for watching.
I think we needed to get rid of some of the fraudsters in the sector. We knew there was going to be a downturn, and really FTX was classic fraud and very little to do with crypto assets themselves. And we are investors in a lot of entrepreneurs that are big believers in allowing a bigger swath of the world to invest in these assets, and they want to do it in a regulated environment. And so this is an opening for all of them to flourish.
Chris, talk to us a little bit. You trade the crypto assets,
Yep.
And I'm sure that you have, a focus that has a lot of different inputs here. Is it institutions? I mean, we just heard that, governments are looking more and more. That was always one of the bull cases. What do you think the bull case is right now, devoid of maybe the retail investor coming back? This has been a heck of a run, but there's got to be something more than retail alone right now, I suspect.
Yeah, I think over time, too, what we're going to see is a lot more talk on regulation. And one of the big stumbling blocks for institutional investors has been a lack of regulation. So, we don't think regulation is going to be something that happens instantaneously. This is going to be kind of more of a long game in regulation. But the more that we're discussing that, the more that we're talking about it, and the more that institutions like us are working with regulators to try and lay out a logical framework for crypto, the more interest I think will pull in from institutions.
So could it be that simple? Are we out of the dark ages of cryptocurrencies?
There's a lot of just crap out there, though. I mean, tokens, things that were just minted out of nothing. I mean, FTX coin is just one example of that. And so I'm wondering, what is it going to take to shake that out of the industry?
Yeah,
Does it need to be shaken out?
Well, I think it needs to, because what we don't want to happen is to have retail investors continuing to get hoodwinked into these tokens that have essentially zero value, but where you have a lot of fraudsters which will try to proclaim you can get rich quick by owning this, and unfortunately there's still a lot of people that believe that. So we do need to set the stage clean, get rid of that, and focus on those assets that actually have value, that have a growth proposition that we can actually build a technology on top of or with.
Aside from Bitcoin, which coins do you like the best?
So I've been told I can talk about a few.
Okay.
Bitcoin, on a relative basis, I like it in the near term. It's one of those assets that I think when the Fed really does start to reverse policy, you're going to see a lot of thrust back into Bitcoin. Ether is another great one. I mean, the two of those coins alone are 80% of the market cap of crypto, and they're the easiest to onboard from investors, and they're the easiest to kind of conceptualize. So I think those two assets are going to be around for quite some time. A number of the altcoins, there are a lot of interesting coins there, but it really will come back to the regulatory framework. It's very difficult for US-based DeFi protocols to structure a token to actually create value, because the second they do that,
Right.
They're a security.
Sure.
So I think once that regulation is put in place, it's really going to help to set the stage for really interesting investments outside of those top coins.
That is interesting. But are you still not convinced? What lessons from the previous year can we learn from to determine if we are back on the incline?
When you look in retrospect at what was happening on chain, you can find that there were some highly irregular connections between Alameda addresses and FTX addresses as early as 2019. A lot of the initial movements of the FTT token, and of course, years and years later, it was those movements, using customer deposits from FTX to try and prop up the price of FTT that ultimately brought down both companies. When thinking about why nobody noticed these kinds of things before, I think it's one of those things where, it was perhaps known to insiders within the industry or people who were sophisticated enough to be watching these kinds of token flows that there was something going on underneath the hood. But when you think about the perception of these entities, FTX had sponsorship deals with the Miami Heat, with West Ham, with all of these huge entities, and invested so much in their public perception, it becomes difficult to really flag something as crunchy or as involved as maybe a red flag using on-chain data in terms of this massive PR machine that SBF had sort of built around himself. And so while our research is very useful in retrospect, I think it's a sign that people do need to become more on-chain literate. They need to be using on-chain analysis and on-chain data as a way to protect themselves from future events such as this.
Decentralized finance grew some haters and lovers last year due to the massive fraud and shenanigans. But is that all behind us now?
So the perception around DeFi, decentralized finance, that sort of changed in 2022. So, how are those trends evolving now that we're a month into 2023?
Well, I think a lot of people are lumping together centralized entities like Celsius or FTX with DeFi. The nuances here are important because when you have something like Aave, a lender that is truly on-chain and transparent, you can know about the health of that ecosystem. You can know about every deposit and the liquidities, the liquidation thresholds for each and every single loan. I think DeFi is in many ways the solution to a lot of the problems that we saw throughout 2022, as long as it's actual DeFi and fully on-chain and observable. You can really analyze for yourself and audit these firms to know without any kind of trust assumptions what the state of your finances could be. And I think we're actually beginning to see that on-chain too. People are increasingly turning back to on-chain protocols, looking at decentralized exchanges. The number of swaps is up 3x so far this month since the lows last year, for instance. On-chain activity is really starting to come back. And I think part of the reason why is because people are beginning to see the advantages to it relative to centralized entities like FTX.
Thanks for watching, everybody. We'll see you next time.